G'day everyone, welcome back to Pete's Investing. Today's May 27, 2023. This is the US or the Aussie US dollar currency update. We've got here on the weekly and the daily, both indicators are showing a bearish signal. I'll cover those in a minute. And we've also got a trading idea on the hourly and how to trade that. On the weekly, first off, if you're new to the channel, we look at the triple moving average of the price chart, and that's the moving average 3, 5 and 60. We combine that with the moving average 5 and 50 of the CCI 150. If they're aligned, it gives us a bearish signal. If they're aligned long, it gives us a bullish signal. And if they're not aligned, it gives us a neutral signal. At the moment, it's a bearish signal, so only short positions primarily should be taken. That's on the weekly. And you can see they're on the daily as well. It's also a bearish signal. So because the daily and the weekly are aligned, we only take bearish signals with a better probability of success. Now, before I leave the daily chart, I just want to quickly go through some the support and resistance and diagonals. We've got here a support at 65.64. You can see there it's broken through that in the last couple of days, and a resistance up there at 71.57. So it's broken through that, and that's what we were looking out for. And again, with a bearish signal on our daily indicator. So primarily, if you're trading the lower time frames like the hourly in this case, we take primarily short trades only. So what I've got up here first off is the back test of a shorting position program. You can see there most of these have been single contract entries, with the exception of that little area. It averaged down, so when the price went against us, it added to the positioning, which had an effect on our profitability. This is a profitability chart up here, had a drawdown effect on the profitability. So the way it would have traded that is using the weekly and daily approach when both the CCI and the moving averages of the price chart are aligned. In this case, going short, we add that with the breakout below the fractal of the candle. So when the candle breaks below the fractal, we take a short position, and you do the same thing and continue doing that. When the CCI, you can see the CCI is moving up, so no entries were made there. So that's how you enter short trades. We only enter in the direction of the CCI and the moving averages. So to avoid, let me go back to scroll out, to avoid this little drawdown or any drawdown, this was a pretty good shorting positioning environment, because most of the price was going in the shorting or a bearish outlook, with the exception of that little area. The way to avoid the drawdown, you would primarily only, again, as I said, trade when the weekly and the daily are aligned. So for that position there, for example, during that period when the price is going against you, if you're going short, that was during February, March 22. Okay, back here, there was a bit of a, where we go, February, March. There was a couple of positions there. This is early March, so that was finishing end of March. So you would have avoided going short during that period, because there was no short signal there. Okay. Likewise, during March 22, there are no short signals there. So because there are no short signals on the daily, no short signals on the weekly, you would have avoided going short during that period there. So you would have avoided that drawdown. So that's just a quick summary of how to trade using this approach, using the weekly and daily trend and the fractal breakout. For this and other trading strategies, subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.